Okay, so here, number one, okay, your inventory method is perpetual and it's LIFO. Okay, assumed sales tax is 8.25%. Okay, so in this case, again, we're looking at a bunch of scenarios that will happen. All right, and we're going to use our chart of accounts. Okay, we're going to journalize it. Okay, and then we're going to pop it into our inventory worksheet. Okay, starting with the very first one, June 5th, we purchased 1,000 black mugs for $3.65 each and a freight of $100. Okay, on an account from Cuppy's Co. Terms they gave to us was 5%, 15, net 30. So we purchased 1,000 black mugs, and let's keep in mind this is perpetual LIFO. Okay, so let's go ahead and take a look at my chart of accounts. I purchased 1,000 black mugs on an account from Cuppy's Co.
Purchase expense.
Not purchase expense.
Cost. No.
Not COGS because we haven't sold anything yet.
Mugs.
Yes, in this case, because it's perpetual inventory, we gotta recognize it immediately as inventory. Right?
Wait, so it was perpetual, and what's the other one?
Periodic.
And perpetual, what's the difference again?
So the big, huge, major difference between the two is that perpetual inventory, you're constantly updating your inventory every time you make a sale, every time you make a purchase. Okay? Whereas when we look at periodic inventory, right? This is where we recognize them as expenses first. And then when we reach the end of the accounting period, we must do a conversion entry where we convert our expenses into inventory and also cost of goods sold.
Okay.
So that's the huge difference is journalizing it, you're going to recognize it differently.
Okay.
And calculating it, you will also calculate it differently. So in this case, you want to use mugs for 150. What about how do I pay for it?
Mugs.
That's the account for the inventory, but how did I pay for it?
Purchase expense.
Mm-mm.
Oh, how did you pay for it?
Mm-hmm.
Did they say on an account?
Mm-hmm.
So, checking?
Not checking. Accounts payable because that we owe them money, right? So good. So here, account number 150 and 201. Okay. So let's journalize it first. Okay. It was it June 5th? June 3rd. We purchased 1,000 black mugs at $3.65 each with a freight of $100. And on an account for Cuppy's Co. terms are 5%, 15, net 30. So, June 3rd, right? We recognize that we have some perpetual inventory, so we have to recognize mugs as our inventory. Okay? And then we bought them on an account. Okay. Now it says that, okay, we purchased from Cuppy's Co. Right? We purchased 1,000 mugs, okay, at $3.65 each, okay? And they gave us terms of 5%, 15, net 30. That means they'll give us a discount if we pay within 15 days. If not, we must pay the whole thing in full in 30 days. Okay? Now, what do we do with this freight of $100?
We added onto mugs.
And everything's going to go straight into inventory. So let's figure out what 1,000 times $3.65, right? Plus that $100 freight. What should you get?
$37.50.
$37.50. Okay, good. $37.50. So now that we finished our journal, right, we have a description, we have our debits and credits, right? I'm going to go ahead and we're going to plug it into our inventory worksheet because we just made our first purchase. Okay? So it's June 3rd, right? We're going to skip over the cost of goods sold section and dump this into my purchase section. Okay? So I bought 1,000 items. I believe this is LIFO, right? LIFO.
Yeah.
Okay. So here we made a purchase of 1,000 units at $3.65. So there's 4. What's my total purchase price here?
$36.50.
Plus 100 gave me $37.50. Now in this case, because I'm using LIFO, what's important about using LIFO?
The order.
The order, correct. But I also need to solve for my cost per item because these are going to be batches of inventory that I'm going to be selling, right? So in this case, what's this for this batch of inventory, my very first batch of inventory? How much is going to be my cost per item?
$3.75.
$3.75. In this case, I'm going to go ahead and carry this value over into my inventory on hand. Okay, so I have a total of 3,750. And what I can do here is, this will be my account balance. Okay. So I know how many units I have at all times. So right now, I should have 1,000 units. Okay. At a grand total of 3,750 units. Okay. So that's my very first batch of inventory. Okay. So then let's go ahead and see what happened next. Okay. June 5th rolls around and you end up returning 50 of those broken mugs for a full refund. Okay, so let's use the chart of accounts. I returned 50 broken mugs for a full refund.
Mugs.
And
Purchase. No.
no.
Yeah. Wait, no?
No. Because we're not on periodic inventory, right?
Accounts receivable.
Not receivable.
Payable?
Yes, because how did I pay for the items that I owe?
No.
No. In this case, I didn't because I still owe them, right? But because they're giving me a full refund. They can't just give me money. I didn't even pay for the items. So in this case, they're going to reduce the amount that I owe. And because I placed all my items into inventory, there's only one place I can grab it out from, inventory. So that's exactly what we're going to do. Okay? So it's June 5th now. We have accounts payable because we are decreasing our liabilities, right? And then we're going to decrease our inventory because we don't have those 50 items in our inventory anymore, right? They end up being broken. Okay? Now in this case, what I'm going to do here is, well, we are returning 50 broken mugs for a full refund. Okay? At what cost?
$375.
Not $375. $375 includes freight, right? Can you return freight? $365 a piece. Okay. Okay, so 365 times 50. $365 times 50.
182.50.
$182.50. Okay. So in this case, right, because we end up making a return, we need to go back into our inventory worksheet to adjust our total here because we end up returning 50 items, right? And it cost us $3.65. So in this case, it should have got me a grand total of $182.50. So let's go ahead and adjust our inventory because now, right, my quantity has decreased, right? I no longer have 1,000 anymore, right? I end up returning 50 of them. So I should have 950 left, right? But my total cost, right? My total cost is no longer 3,750 anymore. It's $182 less. So what you could do here is 3,750 minus 182.50 should give you 357.6750. Okay, you could do your math over here just to confirm it. Okay, that you should get 3567.50. And now I need to figure out what my my new average cost is, because in this case, that's what's going to tell me what's wrong with what's wrong with or I'm sorry, not what's wrong, but what my true amount is going to give me, right? So I have 950 at a total cost of 3,567 cents, and you need to figure out what that cost per item is. So because you need to adjust it for the amount of freight that you need to spread across the amounts of items that you have. So in this case, right, I need to recalculate this because I no longer have 50 of those mugs anymore. And it's going to cost me significantly less. It's going to cost me $182.50 less. So in this case, it's going to cost me $3.75526. So in this case, that's what I have to do here. And then I'll plug in this number right here to let me know that my total new amount is going to be $3767.50. Okay. So I'm going to expand this so we know that this is an unrounded number. Okay? So now we have 950 units left at $3,567.50. Okay? So then, that very same day, you end up selling 100 mugs for $10 each for cash. You sold 100 mugs, $10 each for cash.
Mugs and accounts receivable.
Not accounts receivable. We don't owe, or customers don't owe me money. They paid with cash.
Mugs and cash.
Okay, so mugs is going to be part of it, but it's not the first thing that you recognize.
Cost of goods sold.
That's going to also be part of it, but that's not the first thing you recognize. Okay, so what was the transaction at hand? What did I do? We made a sale. You need to establish that you have made a sale first in order to get rid of your inventory items. Okay, so in this case, you're going to recognize sales. We obviously have some sales tax, and we received cash out of it, right? And then we'll come back and update our inventory because we end up selling our items, right? So let's go ahead and do the first one first. So we got cash. So 6.5. We got cash. We have sales and sales tax. Okay, so we got cash for 101 or 102. So cash for 102, sales for 401, and sales tax for 230. So in this case, what's my total amount of sales if I sold 100 mugs at $10 each?
$1,000.
1,000. How much tax am I going to be collecting? $82.50. So therefore, I should have received a grand total of $10.82.50. Okay. Now, you can either put your information here or you can wait to do the next one, which is going to be updating my inventory, because in this case, I just sold 100 units. Therefore, I need to update my inventory because that's what perpetual means, right? I need to constantly update and keep a really good track record of where my items are at all times. So in this case, we're going to do the cost of goods sold, right? How much did it cost me to sell 100 items? And we need to update our inventory saying we no longer have those inventory items, okay? So cost of goods sold, I believe it's 501. And then, yes, your inventory. Okay? So this is where I can't figure this out on my own. I need to go into my inventory worksheet to be able to figure this number out. So here's my inventory worksheet. Okay? I sold 100 units, right? Now, at what cost is, I'm in the wrong box. At what cost am I going to recognize here? How much is it going to cost me if I only have one batch of inventory right now? How much is it going to cost me to sell off my first batch of inventory?
$375.
375,526 is correct. right? If it's going to cost me that much, then what is 100 times that?
$375.53.
Good. So since I sold this amount, I need to get rid of it from my inventory. Okay? So there's other ways around it. You can either simply just subtract it out of my total amount here because I no longer have 950. I sold 100 items. Okay? Okay? So I should have $3,191.97. So what I did right here is I automated a formula to just give me that answer. Right? If you really think about it, let's do the math here. If you have 3,567.50 and you minus 375.53, you should have a remainder of 97 cents. Okay. So that's your first batch of inventory. So what we're looking here is the calculation amount here. This is how much it cost me to sell off 100 items. It cost me $375.53. Okay? And now I can go ahead and make my note here saying I sold 100 mugs. Okay? And that's perpetual inventory. You need to recognize the sales, but also recognize that you need to update your inventory as well. Okay? So then on June 10, you end up selling 250 mugs at $10 each to customer A on an account. And you gave customer A terms of 10% if they pay within 15 days. If not, they owe the whole thing in 30. Okay? So in this case, June 10, we end up selling 250 mugs to customer A. Okay, on an account. So what should my journal look like?
Sales and mugs
Mm-hmm.
and sales tax.
Okay, and what about how did customer A pay me?
Checking.
Okay, did they say that they sent me a check?
Oh, it's cash.
Did I say that we were good that we received cash?
Wait, which one are we on?
June 10.
We sold 250, 250 mugs at $10 each to customer A on an account. We sold 250 mugs on an account.
So if they decided to say, hey, charge it on my account, what does that tell you?
It would be accounts receivable.
Right, they owe you money. They said, hey, charge it on my account, I'll pay you back later, right? So in this case, it's going to be on an accounts receivable. Okay, accounts receivable, account number 103. We're going to do their sales, and then we're going to update our inventory accordingly. So right, accounts receivable, that's how we gain our money. It was on an account. Okay. We still sold to customer A, right? And of course, we still charged customer A sales tax. Okay, so in this case, how much sales did I sell to customer A if I sold 250 mugs at $10 each?
So before tax is 2,500.
Okay, and then how much tax did I charge customer A?
206 with 25.
Okay, so therefore, in grand total, customer A owes me $2,706.25. Okay. And then, of course, you could say right here, sold 250 mugs to customer A. Okay, and then we gave customer A a 10%, an opportunity for a 10% discount if they pay within 10 days. If not, they owe me in 30. Oh, wait, 10%, 15. Oh, we gave them 15 days. Even better. Okay. All right, so then now that we finish our sales, we also need to recognize our cost of goods sold because we need to now update my inventory. So let's go to my inventory worksheet because I need to use my table to figure this out. It is June 10. We sold 250 units, okay? Now looking at my inventory, batches of inventory, right? At what cost per item am I going to calculate here? I only have one batch of inventory, right?
Yeah.
How much is it going to cost me per item in this batch of inventory?
3.7552.
Okay, so in this case, I sold 250 units. So what's my grand total here of my cost of goods sold?
$938.82.
Mm-hmm. Okay. So now I need to subtract that out, right? All right. I have 97 cents minus 82, which should leave me with 685. So in this case, right, I have 850. I sold 250 units, right? So now I should have a remainder of 600 units at a grand total of 2,000. That doesn't look right. I had 87 minus 2 should not give you 16. Should give you 5. So in this case, I have a split penny going on. Okay? I originally started at, what is it, 3, 5, 6, 750 minus a 3. Okay, so that's what I had before, right? 319197 minus $938.82, right? You should get 15. So let's see. If I expand this, what's the reason why it is 16? Okay. So it says right here, it's actually 15.7875. Okay, so therefore, that's not, we need to keep in mind that it should be 2,000, it should just be a net 15, not 16. Okay, because we have this 75% of a penny there, which tells us to round up. But in this case, we can't round up just because we need to keep our dollars, what do you call it? rounded, right? Because we can't charge ourselves half a penny, right? And we can't sell half a penny. So in this case, we used up 82 cents, which once taken out, it gives us 0.1578. Okay, so we just have to keep in mind that this is 0.15. Okay. So in this case, let's see what we have here. We have $938.82. And here, sold 250 mugs to customer A. All right, just in case customer A decides to return, at least we know 250 of them directly comes out from customer A's account. Okay. So then June 12th rolls around and we end up purchasing 500 mugs at $3.75 with a freight of $50 to on an account from Cuppies Co. once again, and they gave us another terms of 5% 15 net 30. Okay. So here we purchased 500 additional mugs at $3.75 each with a freight of $50. So I have to journalize this first. How should I journalize it?
It would be mugs
Okay.
and accounts payable.
Yes, because we purchased it on an account. Good. So there you go. I'm going to copy this here because I already have it there. So it is June 12th or 15th. I think it's the 12th. Yeah, June 12th. We purchased 500 units at $3.75 with a freight of $50. Okay. Okay. Now here, this is where you could choose, right? If you didn't want to plug in the numbers here and then plug it back in there into the inventory worksheet twice, you can actually just plug it into the inventory worksheet. So today's the 12th, right? And we just purchased 500 units at $3.75 each with a freight of $50. So what is my total purchase price here?
1875.
Okay, plus 50,
1925.
1925. And what is my cost per item here?
$3.85.
$3.85. And should be good, even. Now again, because it's perpetual inventory, I need to carry this amount into my inventory on hand. So I have 500 at $3.85, which gives me $1,925 even. Okay. So
do we not pay tax on our purchases?
in this case, because we are a business, we got tax exempt.
Okay.
Yeah. So that's one of the rules of being a business. Now, is it applicable to every single business? No. Sometimes they don't allow it, especially if you're a small establishing business. They may or may not do it for you just because they don't know how legitimate of a business you are, right? But usually if you can prove that you have the business license and everything, you can get tax exempt because you are a retail store. You're going to collect the tax anyways. Okay, so that's the idea here. So there you go. You got 1925, and there we go. So now we have a grand total of 1,100 units at $4,170 and supposed to be 15 cents. Okay. All right. So then now we can plug this number in that we purchased the inventory for a total of $19.25. Okay. So then let's see what happened next. Then it says to here that you returned 100 mugs because they were the wrong size. Okay. And of course, they were large 16 ounce cups. Okay. And of course, they offered you 25% discount on on your account, and they say you accept it. Excuse me. So in this case, right, you end up returning 100 mugs, but they somehow convince you to keep it because I mean, there's nothing wrong with it, right? It's not defective. You can resell it. It's just a different size. Maybe it's a limited edition cup because there's so many units that are left, right? And they decided to reprimand their mistakes for sending you the wrong items. They said, you know what? We'll give you a 25% discount, okay, on those 100 mugs that you've ordered, okay? So in this case, we could figure this out on the inventory worksheet, okay? Okay. How many items did we return?
None.
We didn't return anything, right? But how much did it cost me?
375.
$3.75 because we're assuming that we just opened the box of inventory that we just received, and we realized that, oh man, we have 100 of them that are the wrong size, okay? And they're willing to give us a 25% discount. So in this case, right, I'm gonna get it
50?
100.
So we would do 3.75 times 100 and then times 0.25.
Correct.
So it would be a total of $93.75.
$93.75 difference here. So in this case, we need to adjust our inventory accordingly. In this case, right, we no longer have this amount, right? In this case, we still have 500, right? Make this separate so you can see this is a calculated amount. Okay, so in this case, right, we now have $18.31.25. So what we need to do here is we need to now recalculate our average cost per item. I'm sorry, my cost per item. So in this case, because now I end up getting a discounted amount, right? I end up getting a refund for $93.75. So therefore, my new total cost is $18.81 or $18.31. So in this case, I need to spread this cost amongst the number of units that I have left, which is 500 units for this batch of inventory. So in this case, what is my cost per item for this batch of inventory?
Oh, I was talking with the mute. 3.6625.
Okay. So I'm going to change this to that 3.6625, which should adjust your cost to $1831.25. So now you'll have a total of $4,084.40 at 1,100 units. Okay. So now that I have my return, I know that I should have got a refund for $93.75. Right, it was same day. So you returned. I'm going to say we got an allowance for 100 mugs, okay, at $3.75 each. Not for a full refund, but 25% discount. Okay. Then on June 16, okay, you sold 600 mugs, $10 each, to customer B on an account, and you gave him terms of 10%, 10 net 30, because he's going to owe you a lot of money. Okay, so on June 16, you sold 600 mugs for $10 each to customer B on an account. Okay, so how should I record this?
Sales and accounts receivable.
Okay. So in this case, I don't have enough space there. So I'll just have to carry it over into the next one. So it's June 16. Okay. Let's see, we sold 600 mugs to customer B on an account, and we gave him 10%, 10 net 30. So in this case, if we sold a total of 600 mugs at $10 each, what's my total sales going to be?
6,000.
6,000, and how much is the sales tax?
495.
Okay, so that means customer B owes me $6,495. Okay. And then now we need to calculate what we sold. Okay. So here, inventory worksheet. We sold 600. Now, let's determine this. First off, what method are we using?
LIFO.
We're using LIFO, last in, our first out. So in this case, which batch of inventory am I going to take out from first?
The 500.
We're going to get rid of the last 500, right? But we need to sell 600, so we will be dipping into our second batch of inventory anyway. Now in this case, we know what 500 at $3.6625 is going to equal, right? It's going to equal the entire $1831.25, right? we're going to get rid of that entire batch right there. So, and we need 100 more, right, to get us to our grand total of 600. So right here, this is another calculation. Okay, so in this case, right, like I mentioned, the 500 is at $3, 66.25, which we already know is gonna give us a grand total of the 1831.25. So we know we're gonna get rid of this entire batch, so we can just go ahead and zero it out. Okay. Now we also need to do another 100, right? And my cost per item for that one is
3.7552.
okay. So that means how much is going to be my cost of goods sold for that 100 items?
375.53.
All right, and then right here, I added these two numbers together to get a grand total of selling 600 units at a grand total of $2,206.78. So now I need to make sure I update my inventory accordingly because I just sold another 100. So I had 600 minus 100. I should have a total of 500 left, and it should be at 63. Let's see. 53, and I was at 15, so it should be 62. Yeah. So 2,253, 15, 2,253, 15, minus 375, 53. Yeah, you should be at 1877, 80, 62. So if you want to replace this, you can, and we can just manually calculate it. It's up to you what you want to do. Okay. Still going to give you roughly around the same answer. So there you go, 62. Okay, so this is the number that I'm focusing on here is 2,206.78 is what my cost of goods sold was. 2,608.78. Oh, 2,206. Okay, there you go. And we sold 600 mugs to customer B. Okay. All right, let's see what happened next. Okay. June 18, customer B, a couple days later, ends up returning 100 mugs for a full refund. Okay. They decided to return 100 mugs for a full refund for customer B. Okay. So how do I do a refund? Let's look at my chart of accounts. This is customer B is returning.
Return and allowance.
Correct. Sales returns and allowance. What else do we have to give back?
Sales tax.
Mm-hmm. And how did customer B pay me?
On an account.
On an account. So therefore, we have to undo the account receivable. So sales returns and allowance is 405. Okay. Okay, 618, customer B returns 100 mugs for a full refund. Okay. So we said we're going to recognize sales returns and allowances. Sales returns and allowances is a contra account. So that's why it flows in the opposite direction. So it needs to be debited instead of credit. Okay. 405. Sales tax, right? We need to undo it. So we need to give back the money. So we're going to decrease the liability. Okay. And because we are doing a decrease because we're giving the refund, right? We're going to decrease the amount that the person owes me, okay, by crediting the account. Okay. So if customer B is returning 100 mugs for $100 or $10 each for 100 items, what's my grand total that I'm refunding?
1,000.
1,000. How much tax money am I refunding?
$82.50.
So therefore, the total amount of refund is going to be $1082.50. And this is where I need to make a note here that customer B returns 100 mugs, full refund. Okay. So if that's the case, if we got our full refund, what actually happened here? Did the customer return the merchandise?
Yes.
Yes. So the customer returned the merchandise, and how do we recognize that? Because in this case, we have to, yes. We're going to put it back into our mugs account, and what else? What do we need to undo here?
The accounts receivable.
We already finished that section where we returned the money back to the customer. This is now returning the product back to my inventory. What did we do to represent that we sold the items?
Sales.
Good, okay, but what about updating my inventory? How do I get rid of the inventory off my inventory worksheet? How did I represent that I sold those items out of my inventory?
Cost of goods sold.
Cost of goods sold. So in this case, if the person who's returning the product back to me, did I sell those items?
No.
No, so I have to put it back and undo it. Cost of goods sold. Okay? In this case, those items are not even customer B's anymore. So returned 100 mugs. Okay? So in this case, I need to figure out how much that's going to cost me, right? So let's go ahead and take a look into my inventory worksheet. Okay? So if you remember this rule very specifically, right? Here I sold 500 and I sold 100 units. We don't care about this, okay? Why is because if you do end up backtracking, you would have to redo a lot of calculations and you would have to fix a lot of journals. The easiest and correct best way to do this is to just go ahead and simply look at your inventory worksheet. Okay? Look at how many inventory items you have on hand. And what you're going to do is you're going to take whatever last batch of inventory. So in this case, I only have one batch, right? That's currently open, that has value in it, because in this case, this batch of 0 doesn't exist anymore. It's gone. So it doesn't appear on your table anymore. All you have left is this 500 units at $3.75,526. So that's what the exact amount you're going to be taking is. You're going to add that amount back into my inventory exactly like this, because that way, instead of having going to backtrack and fix all my numbers and adjust all my journal entries accordingly, this way it will save you time by just adding what you have left remaining in your inventory. Okay, so in this case, it is the 18. We are refunding 100 units at $3.7552, which in this case, it's the same thing as what we had up here, right? That's what we sold last, right? So in this case, this one panned out perfectly. But for any cases that, let's say, you go in the future and you kept selling, and then all of a sudden you return, that's what you have to do. You can't just go backtrack and use whatever amount that is there because of the method that you're using. Okay? So in this case, you should get back $375.53, which will increase us back to $600, which will increase this back to the $2,253.15. Okay? So that means I need to refund $375.53 back into my inventory. Okay. All right, so let's stop here for now. Okay. We're going to take our let's take a 15-minute